Hey, good morning, everyone. This is Vance Williams out of Seattle, Washington. Welcome to my morning Forex trading show. It's Thursday, November 20th. I create these shows Monday through Thursday. Keep in mind that next week is a big holiday here in the U.S. Most of the U.S. will unplug from basically Thursday to Sunday next week, including me, celebrating the Thanksgiving holiday with our family. My show's a little later today. Yesterday it was super early. Today it's a little bit later. I just do these shows when I'm ready to go. Sometimes I'm focused on some trades and I don't get to it, that sort of thing. Sometimes I'm just sleeping. Sometimes I'm just up early. You get what you get. I want to point out that when you do click on the video to watch the show, like I'm going to do right now, be sure and click be part of the conversation. This is just a pop-up right here. And then you can see links over here. It looks like I'm not showing one of the links. So let me refresh that. I just clicked to show my website, but this is Twitter here. You can follow me. You'll find out a few minutes before I do the show what I'm going to talk about. And then here you can click and go to my website. And on the top right of my website, you can download some free ebooks. And they'll be really helpful. I mean, you'll learn a few things that you didn't know for sure. So be sure to check that out. Also, email me anytime if you have any questions about anything. All right, so let's pop that out of there, and we'll talk a little bit about fundamentals and big banks, and then I'll get to price. Price is basically has been positioning to make a bullish move here, and I was kind of hoping to get on the show before it did that, but here we are. I want to stress that what I do on this show is for your educational purposes only. Be very careful. Forex trading is not extremely difficult, but you really do need to know how to do it. You need to understand how to read probabilities. In other words, what affects your probability of winning any trade. You need to know how to manage your risk, and you need to train yourself to execute in a way that most of us were never trained to do. So it's not difficult unless you're doing the wrong things. So don't think that if I tell you which way it's likely to go, which I usually do, that you can just trade in that direction and make money. Very often inexperienced traders, even when they get the direction right, they still lose money because they manage their risk poorly. And part of that is they don't execute well. They close out of a trade that's they think is going against them, and then it turns out to go right to their target. Or they get greedy and hold on, do not take their profits, and it ends up stopping out for a loss. So, just be careful. And fundamentals today, I look quite a bit at the markets. In fact, I looked so long that I ran into an important principle in my mind, and that's this. If you have to study something too long, there probably isn't anything there. So I think that's part of trading. I think we have to be careful not to look too hard for answers that don't exist. I don't see anything out in the world that would change anything right now. Our story was strong U.S. dollar, weaker Eurozone, weaker UK. But this week, coming in about Monday, out of Germany and UK, of course, it was yesterday as well, that story changed a bit. And yesterday morning, as I said, it appeared that the market and the banks were changing directions. Part of this was the German ZU data, and part of this was central bank minutes out of the UK. Yesterday, the Fed price bounced around quite a bit for about an hour, but it was really about as neutral as it could be, and that remained after more scrutiny yesterday evening. I think I got it right when I said that the central banks are going to talk price up a bit when it comes to the euro and pound. Of course, the U.S. was neutral, but euro and UK is being talked up a bit. I was anticipating that we would see some action out of the pound this morning at 4:30 a.m. If you look at my chart here, you'll see that was about right here. I had that marked on high impact data. I was also anticipating something out of the U.S. at 8:30 this morning, but that data overall seemed pretty flat and neutral. So all that being said, we have to, if nothing changes, then we have to stay with where we're at. And where we're at right now is that the story of strong U.S. dollar, weaker euro, weaker pound is been changed just a little bit. So keep that in mind. I talked yesterday about, you know, one of the big earner banks changing directions. The policy talk just a little bit changed, and we need to be sensitive to that. I think with respect to big bank trades, they seem more cautious right now. As I said yesterday, banks might be more conservative, just finishing out the year, holding on to the profits that they've earned. Two of the top earners right now are long on the euro. You know, we don't know how much they're committing to that, but we don't need to know. We already know the risk is a little bit higher right now, but two of the top earners are long on the euro, so they seem to kind of agree with what we think here. Looking at price, in the headline I said the bulls are running into strong supply areas. And what I was, sorry, I still got a little bit of a tickle in my throat. I was talking about is right here. I'm talking about this area. It's been bullish. It was bullish yesterday. It corrected fully here. It was bullish today. Data was flat, so they continue to push up right here. But they've run into a lot of sell orders in this area. Even looking at this last candle right here, you can see that for 30 minutes it went up and down and up and down and up and down, and ended up closing very close to where it opened, but above this level. And so that's going to embolden the buyers right now, probably, to continue on up. So now's probably a good time to be looking for a trade. You know, the reason why there's so many sellers in this area is because long-term the market is bearish on the pound, bullish on the dollar. But they're not following the story like we are, you know, day to day. And they probably haven't recognized that this sentiment has changed right now. They'll adjust to it. And so the market's a bit long-term bearish, but short-term this week, what's happening right now is they're bullish. And so I said it's bullish, but they've been chopping and grinding through all these sell orders from these longer-term sellers here. And so that's where we're at. Now, can they get through here? We're going to find out. All right. On the euro, same thing, you know, bullish. You know, you can see this ascending channel yesterday. We had the bounce around from the high impact data, again, drop down later in the late session, and then, you know, back bullish again. And they're running into what? A bunch of sell orders from this long-term area. Boy, my chart's messy. I'll have to clean that up. But you see this huge downtrend, really an uptrend for the dollar. So the banks have made a lot of money on that, and you know, they want more of that selling. But the reality is right now that story's changed a little bit, and so it's bullish. But those guys are they got sell orders sitting up here, and that's why this has not taken off, even though the market's a little bit bullish right now. So zooming in, the balance of buyers to sellers is pretty flat. You can see that in the moving averages. It's just right there. So probably if we were looking for a sell, look for a move below 2511. Obviously 2500 is usually a double zero is a good psychological number. That's been an important number. There's a lot of, if we were to zoom out, there's a lot of stuff, a lot of areas where there's buy orders all through here. So, you know, not looking good. And that what it does is, even if we've got strong moves to the downside, they end up being very choppy as they pick up the buy orders. So keep that in mind. That's part of your risk management. But trade below 2510. I would say that probably the level you want to see price move above is 2569. If you want to know if you want to determine if the market is eating through those sell orders, what you need to do is you need to wait until this 30-minute candle. So if price moves up above here, wait for the 30-minute candle to close. If the buyers are stronger, in other words, there are more buy orders than sell orders, that 30-minute candle will close above here, right? So that's what you got to wait for. And you can see all through here, anytime it touches up into the area, the 30-minute candle has not been able to close. So that's one thing you can look at. Or if it just makes a good strong move, you can look for a pullback here. Pound, basically pounds in a position, and I would drop to the 5 minute just to observe the behavior and look potentially for a trade here. Let me see what we've got. 33 pips. This is actually a pretty good move. Let me zoom in and put a fib on there. So we're above the level. And one of the things I want to caution you about is this is all about advantage and managing risk. If you enter your trade, let's say you want to buy, if you enter your trade down in this questionable area, you increase your risk. So if you get your setup, you'd like to get your entry above that area, because if it gets back down in here, you're going to motivate these sellers and say, hey, these buyers can't do it. So going back to that 5 minute, I want to take a look, and if you don't know how to draw these new wave fibs with precision, you can learn to do that at forexartofwar.com. There's a video, there's a picture of a nautilus, or at least a spiral, and it'll say master the fib. If you know how to use this fib with precision the way I teach it, you will see things that other people don't see. Now it looks like there is potentially a trade here right now. So probably what a lot of traders would do if they wanted to buy in this area is they would try to get a really good price as close to this level as possible, get their stop down below this barrier, and get out as quickly as they can given the indecisiveness in the market. What this has been doing is been driving back down. Now let's go back to the 30 minute. Don't lose sight of this. If this candle closes back under here, that'll take the wind out of the sails of the buyers. But right now it's closed up 1, 2, 3 times. So this is probably going to encourage the buyers a little bit. So potentially a trade there. Medium term, looking out 6 to 18 months, that fundamental story is softened a little bit in terms of the US dollar being bullish. So right now, a couple of banks have changed directions and they're going the other way. But keep in mind, this isn't really a strong sentiment. It's just current market conditions. Let's see what else I've got. Let me just take a quick look at the Australian dollar while I'm here. Real simple. I look for a move below 85.76 for the, if you're looking for a sell, it's got to move up quite a bit to get into a buy situation. And the Kiwi is, move below 78.24. Keep in mind, when you see this long tail here on the 30 minute, you know that there's some buy orders sitting in this area. So it does break below here. Look for some pushback. Okay. All right. Okay. Just to remind you, you can get my book at forexartofwar.com. Just click on forexartofwar.com, go there, and you can get it on the top right. To the members on our trading team, I'll see you guys at 9:30. That's coming up here in about 25 minutes. Everyone else, have a great day and a great weekend. I hope you got just one idea that helps you with your trading today. Thank you.